Good afternoon and welcome, and lovely to be with all of you this afternoon. With consumer interest at all-time highs, the crypto innovation space offers massive opportunities for innovators, entrepreneurs, and investors from both Wall Street and Main Street to make money. It is critical to gain a better understanding of what it will take to normalize cryptocurrencies and the risks associated with them while striking a balance to not stifle innovation, but rather encourage the development of new technology in this arena. These risks require regulations and structures to create more certainty in the market. The third and final part of the Fintech Innovation Series will provide a non-technical overview of the major risks in the regulatory landscape for crypto innovation. Let's review a bit of logistics. Today's session starts with brief intros of our speakers, followed by semi-structured discussion with these expert panelists, interspersed with or followed by questions from you, the audience. We invite webinar attendees to tweet using hashtag Fintech Innovation Series, and if you wish, tag anyone. Please use @RFSUNY, @SUNY, and/or @NYDFS, and remember to use the chat function for comments you'd like for us to address here today. With that, it's my pleasure to introduce our speakers. This afternoon, we have Michelle Bond, is Chief Executive Officer for the Association of Digital Asset Markets, also known as ADAM. Welcome, Michelle. Next, we have Noah Perlman. He is Chief Operating Officer at Gemini. Good afternoon, Noah. Welcome.
Hi, thanks for having me.
Welcome. And Richard Weber is our General Counsel of New York State Department of Financial Services. Welcome, Richard.
Hi, good afternoon.
And I'm Hadar Borden, Director at Blackstone Launchpad at Techstars at the University of Buffalo. While I offered very short introductions for our speakers, I'm going to invite each of them to offer us a little bit of more of an introduction about their background and also tell us a little bit about why they believe this conversation matters. So with that, I'm going to turn it over to Michelle.
Great. Well, thank you so much for having me. I'm thrilled to be here today. As you mentioned, I am the CEO of the Association for Digital Asset Markets, known as ADAM. I joined ADAM actually last October as CEO, and just a little bit about background about me. I am a regulatory lawyer. I basically have worked on financial services issues my whole career in both the public and the private sectors. And I am a former regulator myself. I worked at FINRA, I worked at the SEC, and I also worked on policy on the Senate Banking Committee. So I worked on a lot of legislation, including the Dodd-Frank Act and the Jobs Act, the Stock Act, hearings, and a lot of different oversight issues. And then, of course, in the private sector, I've held a few different roles, working for Bloomberg and also in fintech, which is a really exciting space on the regulatory side and certainly on the policy side as well. And honestly, I think working on these like cutting edge policy issues, especially the ones that we're seeing in all the major headlines right now, it's a really exciting space to be in. And I think it's really important that, we talk about advancing this new industry and ways to help foster it, but in a way that actually also protects consumers. So that's basically the mission of my organization, ADAM, which exists to help enhance market integrity for digital asset markets. So I think conversations like these are incredibly important because we're able to, figure out ways in which like the industry and the regulators can all work together and figure out ways in which we can see the industry grow, but in a way that investors are protected. Thank you.
Thanks so much, Michelle. Looking forward to hearing a little bit more about your experience this afternoon. And Richard,
Great, can you hear me?
Hear you. Great.
Excellent. Well, first, thanks so much for having me here. I'm really excited to be part of this panel and participate in today's discussion. So I have a mix of private and public sector experience, 20 plus years in the federal government. I had served as a prosecutor in the Eastern District of New York at the U.S. Attorney's Office, where I had the pleasure of working with Noah Perlman. So it's good to see him again and be part of today's session with him. I was at the Manhattan DA's office. I was the head of money laundering at the Department of Justice. I was chief of IRS criminal investigation. And then I also worked as the head of financial crime compliance at 2 foreign financial institutions. And then I decided that I needed during this crisis to change jobs and return to the public sector. So I started last year as the general counsel at the Department of Financial Services, where I've been really working with all of our divisions on a host of different issues. And the fintech virtual currency space has been one that has been quite active in the past year. So very excited to be part of this office and very excited to be part of this panel.
Thanks so much, Richard. And Noah.
Yes, so thanks for having me. And as Rich alluded, it's great to be on the panel with everybody, but certainly Rich and I go way back. I started my career as an AUSA in the Eastern District of New York, then did a stint at the Drug Enforcement Administration, also in New York, where I was the GC of the New York division. Then almost 14 years at Morgan Stanley in a variety of roles, but most recently as the head of financial crimes there. And then 2 years ago, moved over to Gemini, first as the chief compliance officer, and for the past year as the chief operating officer. One of the things I did at Morgan Stanley towards the sort of latter part of my career there was I sat on a subcommittee that evaluated all crypto opportunities for the firm, and through that became exposed to the space and super excited. So when the Gemini opportunity came up, it seemed to make sense. One of the things I'm excited about exploring today, and I've been exploring, is, as Michelle alluded, this collaboration. I know we're going to get into it between regulators and the industry. I know there are some OGs that have been in this space a decade plus, but we're still in very early stages, and we have the opportunity to set up a framework that protects consumers, that allows for innovation, and I'm excited to be part of that conversation and working with regulators such as DFS, who really, as we'll explore, I'm sure, they really, in our words, get it.
Terrific. Thanks so much, Noah. And as you alluded to it, we are going to jump right into our conversation. So my first question to our panelists is, what is the role of a regulator versus industry, and what roles and responsibilities should each player take on? So Michelle, why don't you kick us off?
Yes, absolutely. I would love to. That's actually one of my favorite topics because I feel like it's such a balancing act. Certainly the regulator wants to make sure that investors are protected, but also, I used to work at the SEC as, an attorney there, and our mission when I was at the SEC was for investor protection, but there were actually 2 other prongs. And those prongs were to foster fair, orderly, efficient markets, and also to foster capital formation. So I know that a lot of, the regulators definitely, and I know it's well known that, people think, okay, the regulator's focus is on consumer protection and investor protection, but really, truly, and I think the regulator's focus is actually much broader than that. And I think that's a tough job, certainly, because, obviously the regulator wants to be receptive to new and innovative technologies, but, and to be helpful in a way to advance it such that people, the investing public won't be necessarily harmed by it. So while the industry, from an industry standpoint, is looking to drive innovation, that innovation really does need to be compliant with the rules and the laws of society. And I would also say that ADAM, my organization, has taken a unique step, and we play an interesting role in that, where what we do is we're an industry group that is a standard setting body. And what we've done is we've created a code of conduct that establishes principles for market integrity. So while our members are all industry participants and market participants, they said, you know what we should do is we should come up with a good, a code of conduct and come up with a way where we can sort of, help advance market integrity. So there are principles for governance and compliance and conflicts of interest and those types of things to help really foster market integrity. And I think that helps the regulators because, the industry, I think in many ways is in a good position to be able to do the standard setting, given that, this is the expertise of Adam's membership, for example. And I think it helps the regulators actually do their jobs as well, particularly as they're looking, to exercise their fraud and their, enforcement authority. So I think there is definitely a role for, for industry to play in this as well. Thank you.
Great. And Noah, any remarks on that question?
Look, it's tough to get it right. There are lots of sort of ways you can just sort of explain it, trust but verify, collaboration. I'm very sympathetic to the role the regulators have to play. On the other hand, from sitting in industry, you definitely do not want to be at a competitive disadvantage because you've got international players who are playing by a different set of rules. So trying to find that balance is challenging. And the thing that works best is communication, having constant dialogue and having people on the other side who are open to sort of listening to what industry has to say, certainly not greenlighting it automatically or just sort of providing a blank check, but really open to engaging. And when that works, you can get sensible regulation, orderly markets, and it's good for the ecosystem as a whole.
Excellent point. And Richard, anything you'd like to offer?
Sure. Thanks so much. First, I will thank Noah for his comment about DFS getting it. He'll get extra points for that. Not sure how he can use them, but I appreciate it. And I actually do think that DFS gets it. We have a very, very active research and innovation division that is over this area, led by Matt Homer and his team. I think are incredibly engaging and collaborative and have worked very, very well with the industry. Our office is led by Superintendent Linda Lacewell, who's also very collaborative and engaging on this topic and is very, very interested in balancing innovation and regulation, and has been very open to a lot of what Noah and Michelle have been talking about. I think for the regulators, we certainly need to issue clear regulatory standards and apply them in a consistent and even-handed manner when we administer our examination and enforcement programs. I think we need to work together wherever possible, and this is, I think, certainly easier said than done, but to harmonize regulatory requirements, in areas of common jurisdiction to minimize, redundant obligations for entities that are subject to multiple regulatory regimes. Again, easier said than actually executing on that, but I think it's incredibly important to be able to do that. I think we need to, as Noah pointed out, encourage the industry to share, questions and concerns and issues about regulation with the agency that's responsible for the administration of this area. I think it's critical to have that dialogue. Not only will it result in additional clarity for the industry member, but it does help focus the folks within the agency in terms of areas that may potentially need further attention. For the for the industry, for the regulated entities, I think there are a number of things that they should be doing also in terms of roles and responsibilities. I think my list may be a little bit longer than what's on the list for what the regulators have to do. But I think there are a number of things that we would, I think, all agree on. I think all of our entities need to maintain robust policies and procedures. It's important. I came from 2 foreign financial institutions where we needed to completely kind of rebuild or build, from the bottom up, a strong compliance program. So you need governance, and you need to, have compliance that makes sense, risk management and escalation procedures. You need to properly train all the employees on all the different types of risks that are in this space. We need to really look at technology, in the technology space in terms of, how do we monitor for suspicious transactions? How do we use artificial intelligence and those types of tools, which I think is critically important in this space? How do we deal with cybersecurity types of issues? I know we're going to talk a little bit about risks a little bit later, but these are things that that firms need to be thinking about. I think Michelle's point about code of conduct is incredibly important. I'm a big believer not only in collaboration and partnership and talking to industry. I've done this throughout my career wherever I've been sitting, whether it's on the private side or on the public side, but to have something that's consistent that all entities could be sharing and utilizing a similar type of approach, I think, is important with respect to some of these issues.
Thank you so much, Richard. And you bled into our next topic, which I want to shift towards, and that is our known risks. So what are the current known risks? If you would list them and explain each one, and focus on cyber hacking risks, maybe AML, consumer protection, and of course, human error, among a number of them. So let's start with Noah this time.
Yeah, I mean, there's a lot to unpack there. So I'll highlight a couple of risks. And we'll start with AML. I mean, that's sort of the big one. And it's funny, it's the big one in the sense that it's the perception. I mean, I don't really know that it's actually the big one when we think about sort of cyber and hacking, but I sort of start with it because I think there's still a perception among investors, the public, the media, regulators, although again, I would note the regulators who are closer to the space, I think, have a more accurate sort of view that in fact, despite the sort of narrative that crypto is used, for money laundering, narcotics, terrorist finance, that actually given sort of the tools we have and the great companies that are in the space sort of working on blockchain analytics, you actually have incredible visibility in a way, sort of more so in some ways than traditional finance, in the sense that when I was at Morgan, right, you saw where the funds came and where they went, but sort of one hop on each side. Whereas here in our space, you can see the sort of path and flow of funds, for all of history. And even if it's a couple of hops away, you can sort of adjust your risk tolerance and sort of make decisions and do appropriate reporting based on what you see, even if it's not proximate to the institution. But that being said, there's still an anonymity in the space. We've got to be diligent, and we take our responsibilities really seriously on that regard. So maybe I'll just pause there.
Great. And Noah, we got a question in the chat. Could you define for us what AML is?
Oh, okay. Apologies. So AML stands for anti-money laundering, and you'll hear terms maybe later in the conversation, but if in the space, KYC, which stands for Know Your Customer, and you'll also hear BSA, sometimes BSA/AML, BSA standing for the Bank Secrecy Act. And I'll be very broad here, but and my colleagues can correct me and fill in. But basically, as a regulated institution in this space, we have an obligation to know our customers. So who our customers are, we collect identification and make sure that they're not sanctioned or on any lists that would prevent us from doing business with them. And then we also have an obligation to understand their source of funds to make sure that the transactions that they're doing are supported by sort of their history. And so that's sort of a long-winded way of saying that we want to make sure that the proceeds and that the money that they're depositing on Gemini does not come from criminal activity. And there's a lot more on the AML, but I'll leave it at that.
Great, thanks so much, Noah. And Michelle, from your perspective, what are some of the current known risks?
So I think a lot of the risks in this space result from perhaps maybe abuses of platforms being used for bad purposes, or areas where there hasn't been sufficient government regulation or guidance. And that's actually, I would say, the birth of my organization, and why they, our founding members got together and said, you know what, we should come up with a code of conduct and really advance best practices for market integrity. So the areas in which they really wanted to focus were essentially on compliance and risk management and market ethics, conflicts of interest, making these markets much more transparent and fair. Custody is another focus for us, at least. Information security and business continuity is another one. And as Noah just explained, AML, anti-money laundering, and the countering of finance of terrorism is of course another big focus for the regulators. And I would say, all of these are not new concepts by any stretch of the imagination. It's just that digital assets and digital asset markets are fairly new. So all of these principles exist in other asset classes. For example, there's an FX code for FX, and for equities, there are all kinds of rules and regulations. Whereas the digital asset marketplace is really still continuing to be further developed. And I think, as those markets continue to be developed, we'll see more enhancements on the regulatory side, and things, that exist, types of rules that exist in other asset classes will probably, become more and more prevalent in digital asset markets. And, we're certainly seeing statements from, senior regulators right now about registering of exchanges and coming up with fraud and market manipulation rules and those types of things. So I do see that our space will continue to be, regulated more, and actually brought more in line, perhaps, with some of the other asset classes that exist these days.
Thank you, Michelle. And Richard, from your perspective, what are some of the known risks?
Sure. So, obviously, as we discussed, innovation is happening, quickly. I think that's a good thing. But it's also kind of important to keep in mind that we have these risks. I think the two biggest ones are the cyber risks and the anti-money laundering, risks as well. I think when you think about cyber, I think about cyber security. I think about data breaches. Given the recent headlines, cybersecurity risk is certainly on the top of my list. I think it should be on the top of all of the entities that are in this space on their lists. Crypto is a financial instrument, and the risks that you find with any other financial instrument are present, here as well. So when you think about the term, of risk in the traditional financial world, you have the same, I think, types of risks here in this space as well. For cybersecurity, we're looking at, and I think the entities should keep in mind that they're technology platform, could be, targeted in terms of, their confidential and sensitive data. There's, hackers out there that are going to, try to infiltrate, their systems and put malware, onto their systems. It's something that they need to take incredibly seriously. I think there's social engineering that is happening out there. I mean, if you just, Google, cybersecurity and virtual currency or fintech, you're going to see a lot of recent cases that really are talking about these current risks in this space that we absolutely want and need our entities to be focused on. The anti-money laundering risk, the AML risk, as both Noah and Michelle have talked about, I think is a real risk, and I think it is something that we're concerned about as a regulator, as a former prosecutor. I think it's something that does keep me up at night. I'm not saying that there's more in this space. I worry about this in all our spaces in terms of what we regulate and the entities that we supervise. We want to, DFS wants to the extent possible, right, keep dirty money out of the financial industry. We want to make sure that that the entities are doing everything that they can be doing to really do their best to ensure that dirty money doesn't enter into the echo stream, and we need to work together to figure that out. I think compliance officers need to be trained and skilled, and you need to hire the good ones. I think Noah is a perfect example of someone with the private sector and public sector experience that comes at this with a really good lens in terms of what are the problems and issues to look at. And we really want all of our entities to take it seriously and to have those resources and the governance and the compliance teams that are focusing on these issues, because we believe that the AML, the BSA Bank Secrecy Act, the sanctions risks are the risks that are really out there and should be taken seriously. New York, as some of us I think know, we were one of the first states to come up with cyber rules and cyber regulation because we felt that it was incredibly important and vital to protect your systems, the regulated entity systems, from hacking, in order to have a governance system in place and the right people that are hired to be doing this work. We wanted to ensure that we had a regulation that was really focused on this, and you're going to start seeing, I think, some cases that are in the enforcement area that are going to be coming out really focused on this regulation to really emphasize the seriousness of this and why it is so critical to focus on these areas. But I think both cybersecurity, the data breaches, and the AML risks are probably the ones that keep me up at night.
And I would also add, Richard, not only have you guys really advanced like the cybersecurity, but you've really, the New York GFS advanced the entire bit license framework and was first with coming out with a whole framework for this space as well. And I think, obviously with Superintendent Lacewell and Matt Homer and you, Richard, I feel like New York has been really working on some of the most cutting edge issues in the entire digital asset space, especially within the bit license framework. And I would urge folks to look at what what the bit license is and what it entails. But it's certainly something that at least Adam's members, a lot of our members are bit license holders, and think you guys have done really an incredible job with coming up with a framework for entities to operate in this space under a regulated framework.
Well, I appreciate that. And as I mentioned, the superintendent and our execs in the space are very much committed, to getting it right. And I think it is important to have regulation. I mean, I come at this from, the regulators, point of view, but I was also at, two financial institutions. And I think, I think you agree based upon what you're saying. And I think Noah would agree also. And I would hope that other regulated entities would agree that regulation is not a bad thing. Actually, regulation is a good thing. I think it's important to know, what the rules of the road are and what the parameters are and how the entities should be operating. I think it provides a certain sense of, protection is probably not the right word, but a kind of a set of requirements that the firms know how to operate and what to do to be able to, be in this space and operate safely.
Absolutely. And, one of the things when I was talking to my founders, Tyler and Cameron Winklevoss, before I came to Gemini, and one of the things that was so appealing to me about joining was that they viewed compliance and regulation as I do, which is actually a commercial and competitive advantage. That if you're an entity that wants to play by the rules and help create the rules, that this will actually be appealing to people who want to come to your platform and interact in a sort of safe way. Look, for another panel, there's a whole discussion about sort of this tension between sort of crypto being, all about empowering the individual, and there's a certain sort of element that wants complete sort of government to stay out of it, and I understand that's appealing and that has its place, but to Rich's point before, when you're engaging on a platform and you're hacked and all of your Bitcoin disappears into some unknown wallet, you really are going to prefer to be in a place that takes these obligations seriously, that has a regulator that's looking over their shoulders, that has 10, 20, 30% of its workforce dedicated to security. And so that's the space that we're playing in.
No, I totally agree. And I think it's institutional market participants that have the responsibility and the opportunity to really develop and codify these infrastructures to advance the long-term interests of the market as well, in conjunction with the work that the regulators are doing. And I think that actually helps with the institutional adoption, and it helps with advancing our industry as opposed to the reverse. I totally agree with you.
Yeah. I mean, one sorry, Rich, just one more point. One interesting issue that all of this raises is, one of the promises of crypto, and certainly something that we're working very hard on, is this idea of bringing crypto to the unbanked and really helping people who have not had traditional access to banking systems to have access to this space, whether it's for payments or savings or interest. And there's the real challenge, because while we need to play by the rules in the sense of making sure that we have documentation and we know who our customer is, some of those same barriers prevent people who are traditionally unbanked from coming into the space. So that's one area where working with a regulator who will be sort of open-minded and be collaborative and say, look, how can we solve this issue? There are folks out there that may not have documentation, that don't have credit history. We want to get them access. We want to do it in a safe way. Let's work together.
Yeah, and that's a great example, Noah, because I know that that particular issue, I mean, generally, our superintendent wants us to do more, in this space, and be, innovators and work with industry on that particular issue. In terms of the unbanked, that is something that we are, as a I think, leading regulator, that we're incredibly interested in doing. And again, it's a balance, right? That's what you had said earlier. We need to balance, the speed in which we do this, and to ensure that that we're following the rules and that the entities are, know what those rules are. And going back to Michelle's point earlier in terms of having the code of conduct, why that's so critical, I also think it's important to really be able to codify, other areas in terms of, how do we benchmark in terms of what, those entities should be doing. And I think there is a way of doing that. One of the things that has been, I think, an issue in the financial institution sector is, having the right culture of compliance from the top down. And it's been one of the reasons why, you see some of the same institutions that are, facing regulatory and law enforcement penalties, time and time again, because they're not focusing on the culture. They're not focusing on having the right people and resources and governance and taking it as seriously as they can. And this is something that I want to ensure as this area, as the fintech and virtual currency area is starting to really, I think, explode and expand. How do we ensure that that culture is there? Now is the time to, I think, talk about it. And there's more that we want to do as a regulator to get people like Gemini and other entities that are serious about this around the table and talk about, how do we ensure that everybody is doing this? It's not like a secret in terms of what you should be doing to comply. And yes, every firm is a little bit different. There's different sizes, different platforms, but essentially when it comes to fulfilling AML and BSA and sanction and all those types of cyber laws and regulations, it's not a mystery. And there are, I think, best practices that should be, I think, looked at and adopted by all of the entities.
Not a mystery, but expensive to comply.
And more expensive not to comply.
And exactly, more expensive not to comply.
So all of these risks also provide lots of space for opportunities and certainly for people to help solve some of these risks. So what are the career opportunities for someone who is new to crypto? Michelle, could you offer your thoughts on that?
Yeah, I feel like there are so many career opportunities out there. I mean, gosh, at all levels too. So look, and I think there are opportunities in all fields. And I started my career in financial services, and I think that's actually a really great, I think that's a good basis to come to, the digital asset space. Like I would say, to have that background, because I already knew all the rules that exist in traditional finance. But I would say, the key, first of all, is to find something that you're passionate about. And with passion generally comes success. I personally, as you probably can tell, I'm not a technician. I don't have a very technical background. My background is legal, but I do understand financial regulation. And I think, there are so many different careers in the digital asset space on the regulatory side. So I would say, obviously, if you want to do regulatory or policy work, certainly the digital asset space is really at the cutting edge these days. But, I would also say that at our member firms, we have 28 members and partners, and they're hiring and communications and marketing and operations, sales, engineers. I mean, people who have markets experience, people who are cryptographers. I mean, it's just like I've met just the most fascinating people in this space. So really, whatever your interest is, I feel like there's probably a space for you in digital assets. And honestly, I have to say, feel free to reach out to me. We take interns all the time at Adam, and we're hiring. In fact, actually, I'm really excited. We just brought on a new head of policy from the U.S. Treasury Department, and previously he was with the CIA. And honestly, we're also hiring. So please feel free to reach out to me, because I feel like I'd love to be able to help you or maybe even, provide you with an internship. Anyway, Michelle at theatom.io.
Wonderful. Thanks so much. And Richard, Noah, anything you'd like to add to that?
Sure. First, I'll say, Michelle talked about, being passionate. Michelle, you're obviously passionate about this space. So I think it's absolutely fantastic. So I actually appreciate watching you and listening to you. I don't think it's a competition, right, in terms of hiring, but DFS is hiring. There's no longer a hiring freeze here in New York State, which is a good thing. We definitely have some open positions in this space. If you go on the DFS website, I think you'll see them, and also happy to have people reach out to me as well. I mean, this is definitely a hot area. There's no doubt about it. And I think there's a lot of potential in both the private side and the public side. Again, I come from both the public sector and the private sector, more time in the public sector, and I will probably be in the private sector again at some point. Again, in my career, I think it's important to see the industry from the government side, whether you do it for I don't know how many years or months, but I think it's important. I've often said, I'm not sure how one can really do it with the conflict rules, but I think everybody in the government side, quite frankly, should go into the private side, even if it means that they're coming right back. And you have to be careful about that, obviously, with ethical rules. But I'm serious because I think it's important to see how both sides work. I have a greater appreciation for the risks and the challenges on the private side, that I did not fully understand or appreciate when I was in government. I actually thought it was a lot easier to, have the technology systems talk to each other and to get data from institutions when I was in government, and learned very quickly that the job is a lot more challenging and difficult, and it takes a lot of time to understand the systems and how things operate on the private side. So I think it's important to have kind of both the private sector, public sector experience, but I think it's great for folks starting out to go into the government, serve the public, serve the people, and also learn a lot about this area.
Great, thanks so much. I'm going to shift us a little bit and take a question from one of our students. So here's a question from a graduate student working on blockchain-based renewable system. And he says the university generates surplus energy that can be sold to open market. However, crypto fluctuates a lot, leading to a feel of uneasiness in the consumers to participate in the network. In a broader outlook, what can be done by the industry or government to capture people's belief in crypto?
Yeah, I'll start off. I think that's a great question, and very, very smart question, and I don't think I can answer it entirely, so I'll rely on the help of Michelle and Noah. But I think there is uncertainty in this area, and I think there's a reason why there's uncertainty. It's still, I think, a new area, and I'm someone that's I think somewhat cautious about this space. And again, it's about balancing. We do need other regulators, the federal regulators, and I know that they are working incredibly hard on trying to get on the same page and to collaborate. It's very difficult, doing this agency by agency, regulator by regulator. I think we do need some, harmonization and some more definitive guidelines from the others. And I think we need to all work together. But I think having more precise information and regulations from others, I think, will help. I think calm down the space.
Thanks. Noah, is there anything you'd like to add?
No, look, I think it's education. It continues to be education, and having sort of as players continue to sort of look like more traditional players, whether it's the exchanges or sort of the industry groups that have risen up. They do a large part of sort of educating the public that this space isn't that different from traditional financial markets. You often will hear questions that they seem targeted to crypto. Oh, there's so much volatility, and you could lose all your money. And then you sort of think to yourself, well, look at GameStop, look at other sort of tech stocks. There's a lot of volatility there. I'm not sort of excusing that there's risk and volatility here, but sort of educating the public that it's a variety. It is it's an asset class which has its risks and its rewards, and people need to do their own research. But a lot of it begins with education.
I completely agree, Noah. And I would also say, market events occur, and especially in areas that are linked to geopolitics, like consider the West Texas intermediate, like gold, FX markets. At one point last year, I think we all remember that oil was selling for a negative price. Bitcoin, yeah, we have seen some swings, especially with recent news about China, and also with US still currently developing a regulatory perspective and outlook. But I think that happens with many asset classes, particularly ones that are as new as this space. And I think education and continuing to research and study these markets, understand how they work, I think that will absolutely go a long way. The other thing is that I think we also have the advantage of some incredible vendors in this space too, that are working on some really awesome tracking software and different tools that are, I think, helping us understand, just the market events and pricing and activity, et cetera. So.
Yeah, I mean, I definitely agree. I mean, education is so key, which is why we spend a lot of time. I shouldn't say we, the research and innovation team. They spend a lot of time on these issues. We had a Fintech series not too long ago where we had hundreds and hundreds of people in the industry, other regulators participate. We had some amazing demos on some real cutting edge, I think, solutions in this space. And I just think it's a great way of getting the word out in terms of what we could be doing in this, in this area, and how folks can kind of work together. And I do think the more we can do, and then the more, industry hears from the regulators and the regulators hear from industry, I just think that the better it is. So, I couldn't agree more.
On the topic of education, if I can just go back, kind of dovetails with the career opportunities. And I would echo what my co-panelists have said, tons of opportunities. You can go on the Gemini website, careers, and we have it at all levels. But from the hiring side, people shouldn't be under the illusion that they need to be tech experts, that they have to know everything about crypto, know how to code, or the whole history of it. But what we do look for is people who demonstrate interest and have done some work to educate themselves. Again, doesn't have to be highly technical, but sort of a red flag for us is somebody coming in and we say, why crypto, why Gemini? And it's, based on a couple of articles they may have read, before they hopped on the interview. Again, you don't need to write a thesis or have a master's in it, but demonstrating that you've taken the time to really educate yourself and have been thoughtful about what the industry could do and what we're trying to solve goes a long way.
I'm still experiencing that at this point in my career. I just participated in the DFS Tech Sprint and I was so excited and I had a blast, and I have no technical background and it was so much fun. So, and honestly, I'm not a coder, I'm not an engineer, and there was still a role for me to play. So I had a good time.
Yeah, I'll echo that. We hosted a FinTech Design Challenge at the University of Buffalo this past winter, and that was exactly it. We're trying to introduce students to the industry and give them an opportunity to kind of highlight that everyone has a role to play. All perspectives are important, so thank you for that. I know we're tight on time. I'm going to kind of close this out with one final question to all of you, and this is focusing on kind of existing models. Are there existing models around consumer protection or sound regulation that we should apply to crypto risk? I think we hit on a few of it, but just want to open it up again to all of you. Michelle?
Yeah, so I think when this industry was just born, I would say there were a couple of approaches that people took, given that there wasn't necessarily a regulatory framework in place. And so there were some people that said, okay, we're going to wait, we're going to ask for permission. We've definitely seen headlines with others where people said, we're just going to act and ask for forgiveness later. That's tough. I think, actually, to be honest with you, I think both of those approaches really have flaws because, you also don't want to be waiting and not, being able to advance, an innovation and business. So I think that's really why, I would say, coming up with something like the code of conduct really helps, just because you can kind of create your own best practices. And so you're looking at the regulation that exists, and honestly, I think the regulators have done a really good job, particularly the DFS in this space, with having a regulatory framework. And then you also come up with your own best practices for compliance, and you setting your own sort of like standards. And obviously you want things like business continuity and information security. And that's very important for any successful business. And I think in conjunction with like what the regulated framework is, that is already existence from the regulators, plus the work that you put in, as a private sector entity, I think that's probably, I would say that's probably the best model to move forward with. But I welcome Richard and Noah's perspective on this as well.
Absolutely.
Yeah. So
Richard?
so I entirely agree with Michelle. DFS, as a prudential regulator, we're mainly focused on safety and soundness concerns, right? And spend most of our energy on issuing licenses and charters, writing rules, and issuing guidance and supervising those entities within our jurisdiction. But consumer protection is huge, right? So our superintendent is incredibly focused on consumers, and she often says that consumers are at the heart of everything that we do here in New York. So it's incredibly important for us to also be focusing on what is right for those consumers. But there are also other regulators, federal regulators that also focus on this as well, which is why we do need some harmony with those other regulators and education and getting everybody on the same page. I think it's incredibly important to have best practices document. Regulation is regulation, and it's key to follow that. But I also think it's important to kind of expand that so entities understand what does it mean to be compliant, and then what else do we need to do to ensure that consumers are protected in this space.
Noah, do you have anything you'd like to offer on that?
Not a ton to add, other than sort of Rich's last point. The sort of competing regulation and regulators is what's a real challenge. Again, for folks in the audience who are less familiar with it, our primary regulator is DFS, and as I've alluded, and not just because Rich is on this call, I do it when DFS is not present. I mean, they're a great regulator to work with, but we're also we've got money transmitter licenses in all 50 states, which means we're subject to annual exams from all 50 states, and sometimes the states join together, but it's a lot of responding to regulators with different concerns, overlapping interests. It's a challenge, even for folks like Gemini who really want to do the right thing. And so to the extent that as we sort of move forward, we can sort of harmonize that, that's something that would be great to be able to do. And it's so different in traditional finance. Certainly in my old life was regulated by an alphabet soup of regulators.
And I think the alphabet soup is increasingly becoming even more important to this space as well. So we have all the, we have the 50 states of the money transmitter laws, and then the BIT licenses, but then also obviously, we have the SEC on, digital asset securities side. We have the CFTC on commodities and futures. And then of course, like the OCC, to the extent that any national bank is, or, fintech with a charter, is concerned. And then of course, there's the Fed, and the Fed is working on a variety of initiatives related to CBDCs, and there are other federal regulators as well, FDIC, CFPB, you name it. And I feel like every single one of them is in some way talking about digital assets. And I've only covered the United States, so, and then we also have the international bodies. So, so there's the foreign jurisdictions, but then we also have the international bodies that are working on this space. So there's no shortage of jobs, I would say. So.
Well, that's great news to hear. I know we're short on time. I'm going to just take one of the questions from the audience that popped up in our chat. Martha asks, is influencers' impact on cyber markets considered an unethical market intervention, potentially subject of regulation?
Yeah, Rich, what are you going to do about it?
Not going to answer that as I'm going to do.
Well, let's wrap things up. I know we're tight on time. It's been a fascinating discussion and so much to consider moving forward. I recognize this is an evolving sector with many facets, but I took 4 things away from it, and they all start with C. So things to think about are code of conduct, collaboration between public and private, and then communication. And I think Richard hit on this, culture. So those were the 4 takeaways that I took away from this conversation. I'm going to invite our panelists to kind of wrap it up from their perspective, things that we should be thinking about moving forward. Michelle, kick it off.
Yeah, well, first, I just wanted to say thank you again for having me. I really enjoyed talking with everyone today. And I would say, some things to think about moving forward is, just think about what it is, you want to focus on. And I'm sure that there's a place for you in digital asset markets. I'm happy to talk with people, offline. I would also say, like, if you're interested in following this space, there is really nothing more passionate these days than crypto Twitter. So if you want to follow, some of the commentary in this space, I would encourage you to just read some of the trade press and read what's available on Twitter. There are a lot of books on Bitcoin and on blockchain. So I feel like that's probably a good way to sort of get acclimated, especially given that this space is certainly still developing. And then also, feel free to go to our website, and we have resources as well. And we'd be happy to answer any questions in the future. So thank you.
Terrific. Thanks so much. And Noah, any final thoughts to the group?
Yeah, I'll confine mine to sort of some unsolicited career advice for folks who want to get into the space. You heard what I said before about sort of interview prep, but I would also remind people that, the job doesn't have to be 100% of what it is that you're looking for. If it's like 75 or 80%, I would say go for it. Because one of the great things about this space, I know it's not just the same, I know it's not just true at Gemini, but at others, is that we want people who can contribute to the mission. And once you're on board doing your job, there's the ability to sort of contribute across the silos, across different spaces. And so I'd say, if it's not a perfect fit, but close enough, jump in and start making a career.
Wonderful. Thank you. And Richard?
Sure. So in terms of takeaways, one is both Michelle and Noah are very passionate about this area. So that was definitely obvious. I think it's something that Noah said earlier, and it's balance, right? It's balance between innovation, which is great, and this is a very, very hot area right now. I think it's going to just continue to expand, but regulation is important. There are risks that are out there, and we just have to kind of balance everything. Collaboration is key, and the more that we can talk and engage with the industry and regulators and those regulated entities, the more that they can talk and have the dialogue, I think is better for everyone. So appreciate being on the panel and being part of this series. I thought today was important, and just another example of why it's key to do these types of events.
Terrific. Thanks so much, Richard. And many thanks to the entire panel. It's been a pleasure. I learned a great deal. Thanks to the team at Department of Financial Services, SUNY, and each of our speakers from today's session. And please note, all of the webinar videos will be posted on the rfsuny.org/fintech site. Thanks so much, everyone. Enjoy your afternoon.